You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music means we are back once again. Time for the Thursday edition of everyone's favorite bi-weekly source for all things options related. Yep, we're talking about the Option Block. We're back. Hope you're having a good week, a fun and interesting trading week out there. It's another one where if you don't like what's going on in the market, just wait 5 minutes. We'll get to that in a little bit. If I sound a little bit different, it's because I'm coming to you from the Southern Studio. Yes, we just closed out the Southern Studio for OIC. I know a lot of you folks are having a good time enjoying all of the great content that's been hitting from OIC. We have all the panel audio, including some fun exclusives. We have all of my conversations with a variety of people I sat down with everybody down there at OIC, so look forward to all that. All you folks on the Pro have already heard a lot of it, and more is coming to you folks. You guys get it all first. Of course, you get Pro Q&As. Awesome one with our buddy Kevin Green on Tuesday, as well as, of course, Options Oddities. Giveaways coming up. I'm giving away the May Pro Trading Crate. Trust me, you want to be in there to get that. TheOptionsInsider.com/pro is the only place to get all of that fun stuff. As we see who's joining us for a fun show today. First, let's go out to Cboe East, because we missed him last week. None other than the Flowmaster, not joining us in person, but joining us. I can't see him across the table like we did a couple of weeks ago, the last time we were in the studio. But Mr. Flowmaster, welcome back to the show. How go things in Cboe East?
Things are great, Mark. Happy to be here, and I really appreciate the fact that you are able to record those sessions because every once in a while we're stuck in meetings and we miss them at OIC. But it's awesome to be able to go back and listen to them. And I encourage anybody that's in the industry, but also, even on the retail side, people are interested in kind of, the industry perspective. They're really helpful, and you don't have to pay, $1,200 to register for the conference either. Things are good, and things have kind of slowed down a little bit market wise, but they're not quiet. They're just kind of, I think we're a little bit back to normal. I think there's plenty on the horizon as far as what might be coming out of Washington and I don't know, the administration in general. But things are good. VIX is kind of at a healthy 20 or so level, and activity's been pretty solid. We're still we had a quiet few days, but yesterday was kind of back up towards the 60 million contract. So volume's still nice and solid.
Quiet few days. Shameless plug. If you do listen to any panel, make sure you listen to the Flow Masters panel, the state of the industry. It's kind of like a mini network reunion. He's on there with our good buddy, the Oracle of New Hampshire, Mr. Matt Amberson, as well as Steve Sosnick, who was just on with me on our inaugural episode of the European Market Brief. So it was a good group there on the panel. And also Henry's known to have a fun visual or two. I was traveling yesterday, so I was able to send the link out to the LinkedIn and the folks who listen to it on Twitter. I put the link there. We'll have to make sure we upload it to the official OIC landing page on the site as well, so you folks can see it. Trust me, if you listen to any of them, listen to that one. And also make sure you follow along with Henry's slide deck, because there's some fun ones, including his 0 DTE one that I just took a quick screen grab up from the conference and tweeted it out, and it set Twitter abuzz. VolTwit was going crazy on that one, so that was kind of fun. And then also joining us, a guy who's always going crazy. He's always in his own personal fast market. He's none other than Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, how go things under the weather shield today, sir?
It's just a big, beautiful day. That's kind of what it is for some, depending on what side of the aisle you're on, I guess. But in St. Charles, it's always a big, beautiful day.
The great, big, beautiful tomorrow coming up right at the next segment, because it's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading, what is lighting up our screens right now. And again, like I said at the top of the show, if you don't like what's popping off in the markets, we're kind of getting back into that zone a little bit. We just wait 5 minutes. You're not getting quite as abrupt of a move as you used to get if you waited 5 minutes. Not a month ago, a few weeks ago, you waited 5 minutes, you could get 100 handles in the S&P. You're not really seeing that right now, but you're seeing some moves nonetheless. Like today, we started off, we were looking a little bit troubled earlier, then we were getting mostly green. And then now we're heading back to red to mixed on the day, listeners, with the Dow just ticking red right as we started the show off. Not much, only 0.05%. But again, if you don't like that, just wait 5 minutes. S&P also off about 0.05%. It has rebounded off its lows for the day. Looks like it got down to about 58.29 or so. In the session, we're about 11 handles north of that right now, but it also rallied much higher. Obviously, well shy of the 5,900 level, let alone the not 6,000 level that it was at not too long ago. And then NASDAQ still up, still managing to buck the trend, up about almost 0.4% on the day today. So again, a little bit of a mixed bag. All that mixed madness coming to a VIX cash that's at about a 20.5 right now. If that sounds a little bit juicier than it was on our last show, because it was up 2.25 points from our last show, which again was last Thursday. We were off for horrible illness. I won't say who was horribly ill, but spoiler alert, it was me on Monday, listeners. I was waylaid. I was struck low by something nasty right before showtime. So yeah, no OB on Monday, but going back to last Thursday, we were down 2.25 points. VVIX, again, I've been saying for a while, VVIX has been showing you that maybe it's not all green out there in the market yet. It was still flirting with the par, pretty close to it, mid-90s. Back up north of par, 105 right now, up 8 handles from our last show. Of course, a lot of this budget battle going on over there in DC, driving a lot of this Sturm and Drang up and down in the markets. There's always a Fed bit of goodies popping off here or there, it seems like, on a regular basis as well, just to add to the fun. And of course, it's tweet season, because every day for the next 4 years is going to be tweet season. So you never know it's going to throw a curveball into the market that day, which is why we're hanging out at a 20.5 in VIX and a 105 in VVIX. Well, let's go out to the land of the Weather Shield. Mr. Uncle Mike, sir. Well, what's been catching your eye in, at least if you're hanging out in the NASDAQ right now, an Uncle Mike type of day, but coming off the highs a bit these days, sir?
We have. So the markets are back to negative on the year, at least in the S&P land. S&P opened the year at 58.81. We're at 58.40 today. So this week has seen some selling. I think for now, it seems like we're going to hang around we're roughly 5 months into the year, and we're down less than 1%. So we have a flat market on the year. Nothing's happened. Well, of course, anyone who hasn't been stuck in a closet somewhere knows that quite a bit has happened this year. So we've had a lot of movement in the marketplace, but it's been what I like to refer to oftentimes as an exciting road to nowhere, and that nothing much has happened as the end result. So seeing that, I think we're getting a little bit more into this administration to see what happens, to see what rolls out. The one thing I do want to remind our listeners of, in the highly politicized environment with which we live called America, if you look throughout history, America's bigger than the Democrats. America's bigger than the Republicans. America has a very strong bull market with both a Democrat and a Republican in charge. There's very little correlation to, oh, this president was really good and the markets went up just because of what he did. And even at times with which there's times to where you can say, well, that didn't really happen. That was part of it. Well, we had this happen. Understand, folks, America is the greatest country in the world, and it has been for almost 250 years now. And so we're bigger than any president or any Congress or any beautiful bill or anything, regardless of how you feel politically. America is a great country, and we're going to be in a good spot. With that being said, a couple things that are catching my eye in the short term, besides the flat markets with which we still have interest rates. They still exist. There's been times on this show to where in years past where we're like, well, interest rates really don't exist anymore. Well, they exist again. And so whenever you're in an environment like yesterday to where the 30-year actually went above 5% for the first time in a pretty decent amount of time, that's something that the markets will take note of. And so longer term bonds have been selling off. The other thing in the news recently is that I believe it was Moody's had downgraded US debt rating down one instead of being AAA. So we're not fully the highest rating as we possibly can. So with that, there's been some selling in the bond market. And until we get some buyers, interest rates are going to remain high. Average 30-year mortgage rate is above 7%. So understand the fact that we are as close as we are to all-time highs in the stock market, which for the S&P 500 is 6147. So we are roughly 300 points away from all-time highs in the S&P. And the fact that we have the political turmoil with which we have, the fact that we have interest rates as high as they are, and the fact that we have a VIX over 20 again, things really aren't that bad, all things considered. Markets still seem to want to go up. In terms of some individual names with which I'm looking at today, looking at the option block poll, the race between NVIDIA and Palantir. NVIDIA has taken the lead again at 133. Palantir is back at 124. That's always fascinating to look at. Google's been rallying a little bit the last couple days. And then the other thing that we're noticing is that Apple is holding the 200 mark, in that it's been struggling a little bit, but it is still holding 200. So we'll see where that goes and see if Apple can hold the key number of 200 and then see if it can get a rally again in the near future. But that is what I'm seeing today, Mr. Mark.
I love that our our poll question has inspired you for the Palantir combo. That's a fun one. You're right. It is a fun race to watch out there. And Uncle Mike, so I guess if I read between the lines, are you now officially off the boat with the 10-year note? Are you burning the ship, sir? Is it done? Time to abandon ship, sir?
I mean, you can go long, you can go short, you can go full speed ahead or full speed astern, whatever way you want to go on that boat. I mean, it's a very versatile boat.
Just kidding. I know you'll never get off the boat. I'm just trying to gin up some headlines, gin up some clips for the
Just
producers.
might go in a different direction.
As we turn now to the Flowmaster, Mr. Flowmaster, sir. Lots going on since you and I sat down in the last Southern studio down there at the OIC Conference. What's been catching your eye in yet another not quite as tumultuous week as we've seen of late, when it's kind of hard to match those 150-point intraday swings, but we're getting a little intraday fun back, sir. What's catching your eye?
We are getting some pockets of volatility, but we definitely kind of got into that crisis mode in early April, and I think it surprised a lot of people how this time it felt different, right? We really felt like, okay, this was a long-term bout of uncertainty that it wasn't going to pass, but you know what, it kind of passed, and VIX at 20 is it's a little bit elevated, but it's not it's not in the 30s, 40s, or even 50s that we saw. I mean, we really have come back down to realized volatility is also the 30-day vol is realizing 19%. So I think there's a lot of repositioning. So there is correlation, which spiked when we went into crisis mode. Has come back down. I was at a meeting yesterday at a big multi-strat fund, and one of their managers was like, correlation had been so low, meaning stocks were so kind of operating without a lot of view on kind of the macro picture, really for kind of the 6 to 12 months before April, that we were kind of due for a little bit of a spike. So I mean, what we're seeing is, things that the metrics that we pay attention to, level of vol, skewness of vol, general sentiment, there's still a little bit of fear. But the fact that we kind of got through things, it's very, nobody quite knows what's going to happen, after the end of the 90-day period. But I guess the market is counting on a little bit more of a reasonable kind of workout. That said, skew is still on the steeper end of things in percentile space. It wouldn't tell anything. We did have that downgrade, as Mike mentioned, that is significant, although the market didn't seem to care. So I think it's just going to be kind of a choppy few months. But the fact that the market is basically flat on the year, and VIX is back into the 20 or below, is just kind of like, maybe we will have a little bit of a mellow summer. Hard to tell.
Don't you dare say the adage, sir, of sell in May and go away. Don't you dare say it, even though you made me just say it. So you kind of wrote me into doing it, sir. Hoisted on my own petard. Looks like the chat says the Southern studio is sounding clear. I'm glad to hear it. You never know when we're in travel setup, listeners, how things are going to work, but I'm glad to hear everything is working behind the scenes. Speaking of behind the scenes, let's see what's going on behind the scenes of the option market today, shall we? Let's fire up the old Flowmaster machine and see what's lighting up the tape out there. Let's start in VIX land, as we are wont to do. Is VIX a rock'em sock'em robots beast today? And I would put it in the respectable category. Once again, it's not lighting the world on fire, but it's not doing 150,000 contracts either. It's doing a 420. So that's definitely respectable, especially when you see that the ADV is back down to only 700,000 contracts. That's starting to get back into the seasonally appropriate level that maybe it should be heading into the summer season. So 420 in that context looks a lot more impressive. The big dog out there today are the June 20 puts, 58,000 of those bad boys. Let's look really quickly, listeners, and see where are the June 20 puts trading today. If you are intrigued, they're trading for about, it looks like around $1.75, I see some for $1.69, $1.80, $1.85. So somewhere in that ballpark, including nearly 30,000 for actually 40,000 for $1.72 today, listeners. Looks like part of that on a spread. So figure around $1.75. Are you down for that, listeners? Are you down for a little bit of the June 20 put for around $1.75? That might be a fun little flash poll we can put out to the audience out there. I'll see if I can get that going out there for you, listeners, from the Southern studio. A lot of irons in the fire out there. But either way, 420,000 contracts on the tape for VIX today. SPY looking decent out there as well, 5.36 million. The ADV nearly 10, 9.75 million. So it seems like it's on track to hit that today. The S, same deal, 1.85 million contracts on the tape. The ADV right around 3.5. So SPY a little north of halfway to its ADV, or I should mean SPY, SPX. SPX closing in on halfway to its ADV out there, listeners. Then let's go out to the land of the small caps. What's lighting it up out there? It is 825,000 contracts. So that's also pretty respectable. The ADV is 1.3 million, so probably going to hit that today. And then the Qs, a little north of 2.5 million, 2.56 million to be precise. The ADV, 4.32 million out there today. Let's go out to single name land. And this is actually kind of a wild one today, listeners. First off, the volume's decent, but the names that are breaking into our top 10 today, this might be the weirdest top 10 we've seen in quite some time, which makes it fun. We love all of our usual suspects, and there's still some of those in there. But Amazon, kick to the curb. Some of these other ones we talk about, AMD, kick to the curb. What's replacing these names out there today? Well, maybe some fun ones. How about number 10 making its inaugural appearance in our top 10, listeners? Yeah, it's CoreWeave. You probably heard about this name of late. It's been moving a little bit. It's tripled over the past month, up 34% just this week alone. Let's see, where is it hanging out right now? It's up another $6.50 or nearly 6%. Just today, they had better than expected earnings, still losing money, but hey, what does that matter in the grand scheme of things, right, listeners? And then they got Google as a customer. That seems to be the thing that seems to make me feel happy. Also, a bit of a deal on their debt, which they probably are rocking a bunch of. So people are also saying this is looking kind of squeezy out there. Either way, CoreWeave, rocking to welcome to the top 10. CoreWeave, are you going to hang out here, or are you just going to make a one-off appearance? I don't know. Either way, it's fun to see a little bit of a shakeup in our top 10. You know, it's a weird day, listeners, when CoreWeave is number 10 and then number 9 is GameStop. So we are in it today, listeners. Let's just sit back and enjoy the ride. GameStop, number 9, 371,000 contracts on the tape for GameStop, 29.43, up about $1.40 today, or nearly 5%, 4.6%. So more buyers and sellers out there in GameStop out there today. I'm looking to see if I see any upgrades or anything else like that. I don't see anything super sexy today. Just more buyers and sellers today, listeners. Number 9, 371 on the tape for GameStop. So welcome back to the top 10 GameStop. It's been a little bit. Again, you know we're in some rarefied territory, listeners. Number 8, our old pal, D-Wave Quantum. Yes, qubits is number 8, 373,000. I told you recently on the network, I said, are you back in that quantum zone? It looks like we are, listeners. 1892, up $3.50 or 23% just today. Man, qubits, just a wild. These quantum names have been some of the most wild paper and most wild performance we've seen in single names in the last 6 months. Going back to the end of last year, we saw some of this stuff come rocketing onto the scene with all the news about Google on the quantum side. That just this quantum stuff has been wild, and looks like it's wild again today. Number 8, qubits. Let's look really quickly, listeners, because I am intrigued. I am tempted. I must see what the fates hold in store for us out here in qubits today. What are the kids up to out in qubits today? Spoiler alert, it's probably going to be a lot of upside and now in the money, maybe call buying. Let's see. Qubits, oh my goodness. Qubits is at an 1889 What's the big dog out there today, listeners? If you guess June 30s, if you guess June 30s, you are the winner chicken dinner. 90 cents. Holy crap, 90 cents for these things, listen. And it looks like people are buying those bad boys. You know, I laugh, but this stock has been so Mr. Flowmaster, I hear you chuckling. This is definitely a name that has to come on your radar of late, right? Just this quantum madness. What are your thoughts on this just qubits palooza that's going up out here today, sir? While I just laugh into my microphone.
Well, I'm looking at a pretty beautiful spike to like the vol term structure across the board. It's pretty wild. I love to see like, front term vols around 200%. That's up 40 points, and it's literally up like a really smooth. I'll send you a picture of it. You can tweet it out if you want. It's just vols up everywhere. Stock's up 22%, and yeah, you know what? Could we get to $30? Like, well, some people are like saying, yeah, we really could, based on it's I don't know, maybe quantum could make the AI dynamics seem a little bit boring, but yeah, paying 90 cents to $1 for those is certainly something. So
that's wild. That has to be a flash poll. So producers, I like the scratch the VIX. We're gonna go.
It's also, I believe there's a 2x levered on this too, and there's always stories out there about the QBTX is double the QBTS, and those ETFs that are levered, they have to buy when it's up, right? So because they're,
I was going to say, this looks like it could be their paper, yeah.
Yeah, so it does create almost like a gamma feedback loop in both directions.
Wow, that's crazy stuff. So listeners, are you a buyer 90 to 95 cents for these June 30s? Yeah, that does seem like that had the whiff to me of like, the old risk manager tapping you on the shoulder, or in the case of a levered fund, having to have that in your back pocket in case this thing goes parabolic. My goodness. That's why we joke on our crypto rundown show that MSTU is solely a product for degenerates, because MSTR is not sexy enough for you, listeners. You need a 2x MSTR. Well, here you go. Qubits not doing it for you. You need a levered. If you need a levered qubits, then maybe you're a bit of an adrenaline junkie. But hey, who am I to judge, listeners? Either way, it's fun paper for the show here, listeners, as we keep on rolling out. That was only number 8. We're only at number 8. I told you. I told you we're in for a wild time today, listeners. Number 7, speaking of MSTU, it's the monster. Good old MSTR, listeners, coming in at number 7 today, 392,000 contracts, 406.25, up about $3.50, or about almost 1% on the day. Again, doing 392,000 contracts, man. I'm still just walking at that crazy qubits paper. All right, to Palantir we go. It's a weird day, I should say, when Palantir is kicked down to number 6, 485,000 contracts, and moving a little over $4, about 4.15 to 3.5%. Seems comparatively tame. Yes, Palantir, number 6, 485,000 contracts on the tape. On number 5, to the fruit company we go, 201.40, off about 70 cents today. Apple's gonna have a hard time hanging with all these super crazy names in the top 10 today, at least from a overall sex appeal perspective. But they're putting up the numbers today. Number 5, 552 on the tape for the fruit company. Number 4, I'm trying to remember the last time if we've ever seen this in the top 10, which again is another reason why today, kind of a fun one, listeners. On number 4, we've got good old Goog, aka Alphabet Class C. You know it, maybe you love it. 173.40, up about 3 1/3, or nearly 2%. They just had Google I/O, so a lot of big announcements coming out of them on the AI side. Some of them interesting, some of them horrifying. So pick your poison, what you like out there. By the way, they're liking it on the stock, even though the stock shot up this morning. It hit 178.13 this morning, 173.38 now. So they come off nearly $5 from that high that they were at. So maybe the market not loving it as much as they thought. By the way, number 4, it's Goog, and then number 3, hot on its heels, listeners, and jumping up quite a bit. We go from 566 for Goog to Google. We've never seen them both in the top 10, let alone next to each other. What a wild time, listeners. We're all living in wild times. So the good old Google, aka Class A, 952, trading 172.09, up about 360 today for them as well, a little over 2%. So Goog and Google putting up a collective, let's see, looks like about a little over 1.5 million contracts out there, listeners, today. So yeah, hot day in the alphabet camp. Number 3, Google. That means number 2 and number 1. Who's going to come in number 2? Who's going to win the battle today? Is it Tesla or NVIDIA? I'll give you 3 seconds to figure it out. 3, 2, 1. Yep, it's Tesla. 343. Actually, just ticked 344 even, up 940 or nearly 3% today. So a good day for Tesla at number 2, even though volume-wise, it's respectable, 1.35 million, but not blowing the doors off for Tesla. You can say the same thing for NVIDIA, 1.67 million. We've obviously seen it do a lot more than that. But either way, it's good for number 1, NVIDIA. 1.67 million, 133.32, up $1.50 or a little over 1%. So again, that battle between NVIDIA and Palantir raging fast and furious. How about that for a top 10 today, listeners? Wow, what a wild one. That was an interesting little saga we went through together there on the old odd block, I should say, on the old top 10. If you're wondering, earnings front this week, we've got some big players popping off this week. We had Home Depot on Tuesday before the bell. We had Target yesterday before the bell. I always love during earnings season the excuses firms make for why they missed their number. Obviously, tariffs is a big one, but a lot of firms throwing a lot of weird excuses out there for their miss, Target being one of them. We had Zoom after the bell yesterday. We got Intuit after the bell today. BJ's before the bell today, as well as TD before the bell today as well. So a lot of interesting stuff popping off this week. So if you're into the earnings front, we had Lowe's after the bell, before the bell on Wednesday as well. So a lot of fun stuff popping off. If you're into the earnings, luckily for you, we got it for you, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we continue our journey right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. I'd say we get weird and get wild, but we already got pretty weird and wild. So I don't know, Mr. Flowmaster, can you possibly compete with a Qubits and all the other CoreWeave and all the other wild stuff? Let's see what you got up your sleeve. Oh, I see what you got here. That's this one could be a fun one. Look at this one popping hard today. We haven't talked about this one popping hard in a while. Yes, it's Peloton, listeners, beloved Peloton. Trading 710, up nearly 70 cents or nearly 10% today. So an actual good day for Peloton. It's been a while since we've said that. You could have sold some decent premium, as I recall, around the earnings last cycle, not that long ago, a few weeks ago. I think those are pretty juicy puts. I think around the 6 handle. I think I might have sold a few of those out there. Remember, it wasn't that long ago on the network, probably a year and a half ago, where the stock was trading around $3, and the 3 puts were trading for 30 cents with a couple of days to go into earnings, and no one in our audience would touch them with a 10-foot pole. You were getting paid 10% to sell the 3 puts in Peloton for about 2 days, maybe 3 days, and nobody in our audience wanted to touch them with a 10-foot pole. So it seems like things have improved a little bit, trading $7.10 right now. That said, they are off their highs. They got up to nearly $11 back in February, and all the madness that was going on in February. Peloton was kind of left by the wayside. Not a lot of folks talking about the resurgence in Peloton, and rightfully so, because they gave it right back up. In April 8th, they got back down to $5. So if you were a believer in Peloton, you could have scooped them at $5, even though a year ago they were trading $283. So that would have been a better do, as the kids say. But that said, Mr. Flowmaster, it's been a little while since Peloton's been on our radar. What's catching your eyes?
Yeah, so this I know we have mentioned it a couple of times, and it's funny. I was just with my parents this past weekend. My dad is a huge Peloton fan. If he doesn't get his fix of Peloton time in the morning, he's in a bad mood all day. And we most people remember this stock. It shot to the moon during COVID, and then imploded as COVID wound down, and they had their issues with dangerous treadmills and things like that. But what I actually saw was on Monday, pretty massive call buying. So over 100,000 of the July 7 calls were bought traded on Monday for 46 cents. That's when stock was around 613 in the morning. The net open interest, I think, it opened by about 70,000, and on that first day, that trade was up $1.3 million. And then we had a little bit of a quieter day, but today we're kind of back. So like right now, we're looking at 120,000 calls on the tape versus 9,500 puts. And so, as you said, stock's up, 10% or so. Today, it's actually the 7th strike again, the July 7th, but it's a little bit more spread around. There's also some short dated, even the 7th strike calls that expire tomorrow, being bought. So, today it's no massive blocks. It's even in the July 7th, it's a lot of relatively small purchases, but these things going up for, anywhere between like 65 cents and $1 today. So, I actually I played around. I got into the stock on Monday, made some money, closed it all by the end of the day. And Tuesday, the stock actually pulled back a little bit. But now today, you have kind of another solid run. So, and if you look at the volatility in it, 88 in the front, it's up about 10 points in that front term. So, a little bit like Qubit, maybe not quite as extreme, but somebody really seems to be focused on this stock. I'd actually consider maybe scalping around again. I don't know if I would trade the options, just maybe not till the stock got a little bit higher, but somebody likes Peloton. It's pretty clear.
Yeah, it's been a while since we've seen this kind of flow on Peloton out there. Do you recall those days, Mr. Flowmaster, when everyone was scared to sell the at the money put in Peloton for 10% because it was the concerns about whether it was going to be a going concern going forward? So yeah, interesting stuff. How wild is that too? Talk about a company that was handed a gift during the pandemic. They should have just liquidated the whole thing, sold it to whatever the highest bidder was, got the hell out of Dodge. They were literally the only gym in the country for the span of nearly a year, and they weren't able to capitalize on that in some meaningful way, which is just why they should have just sold all the stock, diluted the hell out of it. Just got the hell out of Dodge. But c'est la vie. If you know what, listeners, if that's not enough for you in terms of 4-letter P tickers, how about let's go out to PAR, aka PAR Pacific Holdings. This is an oil and gas name out of Houston. We talked about them before. It emerged from bankruptcy back, looks like in 2015. So they've had an interesting run over the last decade or so. A PARR is the ticker, trading $20.50, up about 85 cents or about 4.25%. Of course, oil and gas have been pretty wild sectors of late. Stay tuned for TWIFO coming up immediately after this show. If you're listening on the Pro, if you're listening after the fact, just click next for TWIFO live from the Southern Studio. Listeners, got a feeling we'll probably touch on a little bit of energy out there. It's inescapable. We also went deep into energy on our Pro Q&A this week with Kevin Green. So spoiler alert, if you're down with WTI and nat gas or even a little bit of RBOB, we talked about that on the Pro Q&A. Yet another reason you should be hanging out in the Pro. Meanwhile, PAR is hanging out at $20.50 right now, listeners. And you know what kind of year it's been out there on the oil and gas front. It's kind of been a bit of a rough one. I mean, when a new administration rolls into town and says, drill, baby, drill, probably going to mean there's some more supply in the offing. And on top of that, a global trade war, maybe demand not going to be so robust. So those two things seems like the momentum has been to the downside. Maybe is that starting to stall out? I guess we'll see. But a year ago, they were trading $27.69. So this stock got whooped all the way down to $11.86 on April 15th. So, wow, that was quite a whooping. And then since then, though, if you want to look at, recoveries, this thing's up $6.50 or 47% just in the past month. Some people are thinking maybe the oil downside is kind of tapped out. Or maybe some others think we got a 50 or even a 45 handle in us in WTI. Which side do you fall on, listeners? Either way, this stock over the last month, kind of hard to argue with, up aggressively, up nearly 50%. So, Mr. Flowmaster, it's been an impressive month. What caught your eye out there in PAR today, sir?
Yeah, so this one, I saw a big call block. I saw 3,000 of the June 20 calls trade for $1.15, and then a little bit later we saw another 1,000, actually another 2,000 trade like $1.40 something when the stock was higher. And this is not this is a quiet name. The total average daily option volume is 53 contracts, and so today we have 5,500 contracts. They are all calls. There's not a single put that's traded. It's almost all of it's in the June 20 calls. So these are meaty at the money calls, and as you said, the stock has rebounded. But it's just to see something that, this is, even the stock itself is pretty thin. It only trades 1.3 million shares a day. So 5,000 calls is, in notional terms, it's half of that, right? So it's a big trade for the name. I don't know if it has earnings coming up or anything. No, earnings were earlier this month. So again, it's I've never heard of the name. I looked at it. They seem to they operate some gas stations and stuff out west, and maybe even in like Hawaii or something. But this is another one that we're kind of it's funny. One of the signs of kind of the market at least believing we're out of the woods is we're seeing all-time highs in Bitcoin, like around $110,000, and that just kind of tells you that the market is in the risk-on mode. And so when we see some of these like large and relatively aggressive call purchases, kind of tells me somebody might be looking for something. Now I will say one thing on these par June 20 calls is the Cboe open close data, because the biggest block was traded on Cboe. It actually shows customer to customer, which is a little bit funky. Market makers sold a few, so that's why I think the initiating customer was the buyer. Also, they traded $1.15 when we showed value at $1. So it's a little bit funky to see cust to cust on a block like that, but again, might be worth kind of certainly keeping an eye on the stock. I think that's the most important part, is when you see something like this, is at least it goes on your radar. And if you do have a view, or you want to kind of play around in the stock, it's probably going to stay choppy. And in this case, it does look to me like somebody's looking for some action. I mean, picking the at the money, that's maybe not quite as speculative as if maybe they picked 30 strike or something, but looks kind of bullish to me.
Yeah, these are a funky one. Yeah, you're right. It's weird. Customer to customer. We don't see that too often. That's the broker's dream, though, right? Just match them up and take the money. That's what they're there for. You can find both sides, listeners. You're a happy broker at the end of the day. As we keep on rolling, our compasses, Mr. Flowmaster, were aligned today because we all alighted on this next one, which is Compass. Compass, you heard of them, listeners, a residential real estate brokerage. If you're wondering, they have 29,000 agents who are generally independent contractors. There you go. You learned something today. A ticker symbol Compass, or Comp, I should say, 584, up about 6 cents today. So not quite in the quantum realm out there today, listeners, is what I meant to say. Not quite in the quantum realm out there for Compass today. Only 6 cents to the upside. But on the year, it's been a pretty decent year, up about $1.65 or about 40%. It was trading about $4.20 a year ago, got down to $3.34 shortly thereafter. So they've had a good run from there. That said, they are off their highs. Their highs right around Valentine's Day, 10.25. So it's kind of been a wild year. They were rallying hard all the way up from 334 all the way up to 10.25 exactly, right around Valentine's Day. So actually, I guess you can say glass half empty on this one, because ever since Valentine's Day, they've pretty much been selling off. They've shed almost half of that. So a wild time out here in Compass. And Mr. Flowmaster, I'm going to guess what caught your eye is what caught our eye, these June 6s, sir? Oh, excuse me, July 6s.
Yeah, the 13,000 on the floor of the Amex, similarly to the other one we were talking about, a big trade for something that averages 1,000 contracts a day. I don't know, it's like there's a little bit of, you look at the news and things kind of bifurcate into, there's a recession coming, plus assorted other geopolitical stressors, or the U.S. markets are going to continue to dominate, and kind of this was a great buying opportunity. I think it's really kind of hard to tell, and really probably what we'll end up with is a lot of back and forth. So which is a great market for trading. Might be more stressful for, the buy and hold community. But that's a big opening trade. I actually tried to get a hold of a broker on the Amex floor just to triple check things, but was not able to. But they traded for 60 cents. We had Theo at 52 cents. It is opening. I've been playing around with the calculation on leverage for every option trade, and which is simply dividing the option price by the delta and then taking that in notional terms. This is kind of gives the buyer 5 times leverage, or basically the equivalent of $4 million worth of stock. So for basically whatever $85,000 in premium. Big trade, a lot of leverage. Again, it's one to keep an eye on.
Definitely a lot of fun things to keep in mind. So our top 10 wild, our odd block wild. Let's see if we can keep the wild party going, listeners, right on into the mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, to the mail block we go. What do we have on the docket today? What's weird and wild and catching our eye? First off, let's go out to see our flash poll is now live, listeners, on those qubits June 30s, which some of our chat pointing out they think it's a bit of a retroactive feed loop between Google and Qubits today, because Google obviously being a customer of Qubits, they think, ironically enough, Qubits is driving some of that flow in Google, which is probably true. So if you add in Qubits into that mix, 3 of the top 10 names today are quantum/Google related out there. So yeah, wild stuff out there. Fun one out here today, listeners. But our poll also looking wild today. Our audience having a hard time making up their mind, Mr. Flowmaster, Mr. Uncle Mike. But at the end of the day, looks like right now, or right, they just ticked to their split again, because our audience, 40% want to buy those June 30s. Again, they traded for nearly $1, listeners. I think 95 cents. So you're talking not an insignificant meatball out there. You could do a lot for $1. You could put that to work in Peloton in many interesting ways. 40% want to buy them. 40% say you're not touching these things with a 10-foot pole. And 20%, a hearty 20%, say you want to sell those bad boys. Mr. Uncle Mike, I'm guessing Qubits a core holding of the strategic night. What do you think about trading the June 30s for $1 when the stock was around 15, 16 bucks, sir?
I mean, I would probably be a seller if I had a gun to my head, and I don't believe we have Qubits as a core holding in any of our portfolios, but you never know. Maybe Chris and George snuck it in earlier this morning when I wasn't looking or something. So, but if it's at that level, I think I'll be a seller. Why not? Let's have fun with it in this fantasy since I have no part in it.
You know what it is? That's him buying the June 30s. I hate to break it to you, Uncle Mike, but he's loading up on all those June 30s for $1. So there goes
I knew it.
a whole bunch of dollars from the strategic night. I hate to be the one to break it to you, sir, but you know what? Someone's got to be the bearer of bad news. As we keep on rolling, last week, if you heard my chat with just about everybody down at OIC last week, including the Flowmaster, a lot of people had on their brains, they were all hot and bothered about this proposal coming out of NASDAQ to do what many of you have asked us for 2-3 years now, is expand the 0-day option pool, bring another few kids really to the party out here. And NASDAQ proposing to do just that, proposing to list 0-day options on the Mag 7 Plus Broadcom, so a Mag 8 effectively. We had a lot of interesting talk about that. People are on all sides of this, as actually reflected in our poll right now as well. And you can hear people's thoughts from all different parts of the industry if you listen to my conversations from OIC. Again, a lot of that hitting the network right now or already hitting the pro side. And then we also put it out to our audience. We said, hey, quite simply, are you excited about this proposal from NASDAQ to list 0-day options on the Mag 7 Plus Broadcom? And this one's been kind of fun to watch as well, because our audience kind of all over the place again. It looks like they're kind of close to evenly split right now again. Right now, what is winning, but by a smaller margin than you might think, heck yes, list them now as winning, but only with 38.5% of the vote. The other two are pretty much tied, right around 31% each for we don't need any more 0-day. And I have some concerns also around 31%. So obviously you add those two together, you're close to 62%. So a majority is at least skittish or outright saying they don't need no stinking badges. The folks from, or in this case, 0DT, the folks at Schaefer saw that. They weren't fans of that. They responded. They said to whoever said we don't need more 0DTEs, and they tweeted out a fun little Dr. Evil Zip It gif out there. So they're obviously down with some more 0DTEs. But Henry, I know this is very much up your alley. I know you were in a lot of these conversations last week down at OIC as well. What are your, now that you had a week and change to mull over it, what are your thoughts on the NASDAQ proposal? And also, are you surprised that our audience is as evenly split? And in fact, if you add up all of the votes, they're a majority kind of against it, sir.
Well, yeah, it's interesting, and I did read through it closely and talk to some of our, our fellow exchanges and participants down there. I mean, we all know the challenges to contrary exercise dynamics, and so Cboe and I am all in favor of evolution and innovation in the industry. That's the fact that we've come up with new products and new ways to use products is great. We want to make sure customers don't have a bad experience, and therefore, the challenges to short-dated single stock, even though they're avoiding earnings day specifically, you're still going to have more situations with where a stock moves after hours and blows through strikes, and people that have on spreads don't quite know what to do. Now that basically dealing with that falls down to the brokers that are servicing these customers, and it's we've done this for a long time, and we know that like when you get into a funky after hours move situation, it's confusing, and there's truly just some uncertainty there. You're like, well, I don't know if these are going to get assigned. It depends how many people are watching the screens, and you can make an estimate, but it's still there's a big unknown there, and I think a lot of customers are sophisticated enough to kind of get it and be like, okay, there's I have this leg on, we'll see what happens, but there is definitely a segment of the customers that just won't know what to do, and the brokers will have to help them out. And if a stock is whipping around strike, heading right into the final moments of the deadline for contrary instructions, we're gonna hear some horror stories about people that didn't realize what was going on or didn't know how to handle it. So I think that I think we'll have to see. I would like things to move slowly forward. And the other thing that's kind of interesting is if the industry is specifically gonna avoid those earnings days themselves, maybe there's not such a huge demand for being able to trade, because the truth is, one of the benefits of short-dated options is the precision, right? Like, I'm worried about the employment number. I'm going to put on a trade that literally expires right after the employment number, and you're not picking up extra time. If you're worried about earnings and you want to hedge earnings, and that's the one day that these contracts are not listed, I'm not quite sure. You've kind of taken away part of the utility. So we'll have to see. I mean, it's also it's going to take some time to for the industry to even navigate through the regulation process for that.
Yeah, definitely not a done deal. Someone pointed out, I kind of agree with this too. It is nice to at least see someone playing offense and putting a proposal out. Now everyone can, debate it, and at least we have some sort of concrete proposal. For a couple of years now, it's been like, well, we can't do this because of this, and we can't do that because of that, and it's been a lot of no. At least someone's trying something. Whether it's ideal or not, I guess people can debate it. And you're right. People will probably get run over a little bit in that after hours. I was surprised. I wasn't expecting this down at OIC, because I know one of the reasons contra exercise exists and still exists to such a degree, an hour and a half in the after hours, is because of the market makers. People want to protect the market makers. And I was surprised to have so many of them come up to me down at OIC and kind of admit, well, we get this time frame, but it is kind of a free show. Several of them admitted to me, they're like, maybe we don't need a full hour and a half, maybe 15 minutes could be a sufficient window, and then maybe everyone's on closer to a more even footing. So maybe that might be the concession we end up seeing, Mr. Flowmaster, is that they curtail that window. It still exists for market makers who need to do a little bit of wheeling and dealing in the immediate after hours, whether they want stock or not. But in an hour and a half, they're kind of right. It is kind of a free show, and most retail don't know it exists. So that might be the concession we end up seeing, Mr. Flowmaster. So I was kind of surprised at how open they were to even. I didn't bring it up. They brought it up to me. So I thought that was kind of fascinating in and of itself. Maybe there is some room for flexibility there. Mr. Uncle Mike, I know you're not the biggest zero-day guy, but if they listed these things, would you trade them? I'm curious. And then B, are you surprised that our audience, remember, we do have a lot of professionals in our audience and a lot of super bleeding edge retail who are pretty savvy. So those folks may be leaning a little bit against this, sir.
I think the first thing you need to do is from a regulatory standpoint, they need to do something about the day trading rules. Because if I'm not mistaken, I don't do any day trading. Sometimes I do if I'd say maybe once a year I'll do a day trade because I'll get into a call or a covered call and then maybe the market goes against the stock right away and I'm like, okay, well, I might as well just get out of this right now. But if you have, I believe it's 5 trades in a certain amount of a certain day period, you're labeled as a pattern day trader, and you have if you have less than $25,000 in your account, you can get frozen. And so in the futures world, none of that exists. You can day trade all you want, but in the equity option space, you have to wait a day for the funds to settle. And so I think that's one area to where they need to address this, because if you're trading a zero DTE, you're going to run into plenty of occasions to where you're going to do a day trade. Now, if your account's above $25,000, who cares? But for the people out there that are trading with a smaller amount of money and they want to delve into the zero DTE world, we often tell people if you are going to speculate, you should use a smaller amount of money. But then if they do that, then they're being punished for doing so. So that's one issue that I think needs to be dealt with. And then from there, at most brokers, oftentimes you have level 0, level 1, level 2 to do you have to be level 2 to do spreads. You have to be level 1. I don't even know what they are anymore, quite honestly. But I think there does need to be some education on trading levels for what you can do because of the reasons that Henry was just describing in terms of if you're in a spread after market and things like that happen, you need to have some type of knowledge of how things work and what things do. So I'm all for it. I would like it. If people want to trade, let them trade. But those are some of the issues that I think we also need to deal with beyond the scope of just the option execution.
Look, Uncle Mike throwing the wet blanket of common sense on all the fun out here. But you're right. That could become an issue. Pattern day trading. I mean, these are literally day trades. You can't hold them any longer than that. So that might be interesting. I hadn't thought about it from that angle, whether this is going to bump up against that. It might be worth exploring a little bit behind the scenes as well. Because you're right. If we're getting everybody flagged as pattern day traders all of a sudden, what are we doing? So, yeah, that could be interesting as well. I'll have to go dig into that, Uncle Mike. An interesting point, as always, as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we get weird, we get wild, and we see what's coming down the pike that might be interesting you. Well, let's go out to Uncle Mike as well. Mr. Uncle Mike, sir, let's kick things off. What are you keeping an eye on until hopefully there's another Monday show? I don't get struck low again, sir.
Well, actually, there won't be this Monday because...
oh, you're right. No Monday show. Just as I say that, we're off. Okay, all the way to next Thursday, then fine.
Well, so first thing on the Monday show next week, I'll be celebrating our fallen heroes. It's Memorial Day, so make sure that we remember what they did, the people who paid the ultimate sacrifice. And I was talking about how wonderful America is at the beginning of the show. I wasn't even thinking it's a Memorial Day. I was just thinking how wonderful America is. But America's wonderful because of the people we are celebrating on Monday. So make sure that you think about that. And in terms of what I'm watching, I want to see some bond buyers coming in. I want to see if we can still keep these interest rates to where they are. Of course, I'm watching the 5881 level in the SPX, where we opened on the year. We're 16 points below it as we speak right now. And then, yeah, those are the main things with which I'm watching at this point. So a lot to watch for the next between now and Thursday.
This is I was all hyped up for the Monday show again for a trivia battle. Par none, sir. You just dashed my hopes. Again, Uncle Mike being the bit of the wet blanket here on the show. I'm just saying. Just putting it out there.
You go tell the families of the fallen heroes that I'm the wet blanket for that one.
Just reminding me there's no show. You know, I love to do the show for the people. I'm here for the people at the end of the day, Uncle Mike. All right, Mr. Flowmaster, same question to you, sir. What are you keeping an eye on until your next appearance, also next Thursday?
I think the macro picture, I agree with Mike. It's, watching bonds. That we kind of all, can see that was the warning signal that that really led to the tariffs being delayed. So I think the 30-year is kind of in the 5 1/8% level. So if you were to see some sort of weakness in price there and yield spiking, I think people would quickly get very spooked. Couple little earnings. We have a new broker that IPO'd recently. Webull has earnings tonight. So I'll actually be watching that one just because I know the people over there. And I'm hoping for a nice, relaxing long weekend as well.
All right, everybody. Are you looking forward to a relaxing long weekend? Hit us up. Tell us what we're keeping an eye on what you're trading here, as we're not going to be together on Monday. So tell us what trades you have planned for the early part of the week. But that is going to do it for us on the old OB from the Southern Studio. Like I mentioned, if you're hanging out in the Pro, just hang out. I'll be back post-haste, talking some live, moving and shaking and C-Vol and all kinds of fun coming up on TWIFO immediately after this program. No rest for the wicked here from the Southern Studio. But before we go, listeners, let's go around the horn. Mr. Flowmaster, if folks want to check out all these goodies we're talking about, maybe they want to find some Comp or Par or Peloton flow for themselves, sir. Where should they go? What should they do?
Well, it has been a good week for kind of unusual option flow and for the stocks to be running the way that the option flow kind of says they're going to run. And Trade Alert is the right platform for that. That you can find that at SIBO.com/RMA. You can actually request a trial. We'll get a little email form, and we will help you out. And also just head over to SIBO.com, and there's a lot of information there about the products we have, the new products we're working on, and all the great things we have going on at SIBO.
There you go, SIBO.com/RMA. And Mr. Uncle Mike, sir, where should folks go if they miss your voice on Monday and maybe they want to hear a little Uncle Mike just to hold them over until the Thursday show?
Go to stcharleswealth.com. Like to talk with me about investments with an advisor that is not shy about the option product, make an appointment with me. Would love to have a conversation. You can follow me on Twitter as well, at Mike Tosaw, Tosaw. And don't forget about my YouTube videos. I put a bunch out there a few years ago, and people are starting to watch them again. So check it out.
He's the hot new tube star. He's Uncle Mike Tosaw, coming to a TikTok dance near you. Pretty soon. You haven't lived till you've seen Uncle Mike's dance moves in a vertical orientation. That's good living there. In the meantime, check him out. stcharleswealth.com is the place to go. I don't have to go anywhere, listeners, because I'm coming at you immediately for a little bit of TWIFO. If you're listening on demand, just hit next on your podcast device of choice. And then, yes, Southern Studio back open for business tomorrow. Going to be getting some hot vol action. Who will be joining us on the old Vol Views? Got to tune in to find out. As well as, of course, coming to you with a little bit of options oddities for all of our pro folks as well. You're also getting hit with a ton of OIC stuff on the pro side, as well as that awesome Q&A we just did right before I hopped on the plane, listeners. So the pro is an embarrassment of riches right now. You need to go check it out. TheOptionsInsider.com/pro is the place to go to learn more. Back again tomorrow for Vol Views. Not here on Monday, of course, for OB, but we're back again next Thursday, another episode of The Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.